All right, guys, this is Paul Singh, the market speculator at bullsonwallstreet.com for the week of January 23rd, 2023. It's Monday. We've got a big earnings week coming up and even a bigger week the following week. Let's start off looking at ARK, one of the most speculative ETFs out there. Cathie Wood's ETF. It was a media darling during this big run up where it was crushing almost everything. And of course, in the bear market, the opposite has happened. But notice here, we have some money flow coming in. I've got these two money flow indicators here. We can see a big pop in money flow. And then we can see here, it was looking really ugly when ARK broke below the pandemic low, but it recovered very quickly. And this is an indication that some of the speculative plays, if you're wondering why we're looking at this lets us know that some of the speculative plays are starting to improve here. And we're going to go over one of those setups that we're looking at when we look at some of the stocks that we're looking at. But for now, know that maybe, finally, in these speculative growth stocks, we're seeing some opportunity. And that could lead to a strong market. And if we see the market itself here, let's look at SPY. Still in this big downtrend, but we're seeing improvement. Notice here, we might be making a higher low. And if we break this level, which would be essentially breaking this downtrend, and we're up over the 200-day moving average today, that would be breaking to a higher high, and we'd be essentially breaking this topping pattern in this downtrend. So next 2 weeks could be key because all of these big techs, AMD, Tesla, NVIDIA, Netflix, well, Netflix already reported, Apple, Intel, Meta, Google, Disney, Microsoft, Amazon, all of these guys report in the next 2 weeks. So, and they have very lowered expectations because over the last two earnings seasons, they keep guiding down. So it would take a lot for these things to get crushed, but there's potential upside opportunity in a lot of these. The market likes that they've been cutting their workforces, even though it doesn't look good. You know, Google cutting 15%, Facebook or Meta cutting 10 to 15%, all these other companies as well. The market actually likes that because they feel like now they're leaner and meaner, essentially. So there's some good things happening that maybe, just maybe, we could break out here. So pay attention to that. Don't make any big bets right now. We have to see it first before we can really do anything. And we can see the Qs here. We're seeing something similar. And then IWM is much improved as well. So small caps, we like that they're starting to improve. And our ARK was an indication of that as well. So that's where we are in the market. One last thing, the US dollar, we want to continue to see the US dollar weaken. That is good. I know it sounds counterintuitive, but a weaker US dollar is very good for growth companies. So we want to see this thing continue to slide. We definitely don't want to start to see it pop here. And you can see during the bear market, the US dollar was very strong. And now that we've seen a little bit of a bounce, notice here, topped out in September, the downtrend started in October. And that is when SPY started to move. You see, we made a low in October and we've been running since. So keep an eye out on this chart. You probably want that one you pay a lot of attention to, but lately we've been paying attention to it. So keep an eye on the US dollar. Now let's look at 5 different stocks, 2 different types of setups. One, these growth stocks, and let's start with Square here. You can see growth has been beaten down, right? All of these growth stocks, you could be almost any growth stock and you were crushing it. Post-pandemic here until about middle of 2021. Then we started to top and then it got ugly, right, in this bear market. Now, Square is indicative of what a lot of growth stocks are doing. Square might be a little different. It's growth, it's fintech, it's a bigger company, but I think it still would qualify here. Notice here, potentially bottoming out. We see money flow strong. We see green candles coming in. There's some buying in here. Maybe there's some big guys seeing value in some of these things now where there wasn't value up here at 300. Maybe there is now, around 80. And you can see here today, clearing that 200-day moving average. Doesn't have earnings for a while too, so we don't have to worry about earnings. So we're seeing a lot of growth stocks. Be on the lookout for this pattern where they ran up, really beaten down, and maybe they're starting a new market cycle here. Not making any predictions, but there is good risk reward and value in some of these setups. Someone in our Bulls on Wall Street chat, this one wasn't really even on our radar, but it was mentioned. Look at how ugly this toast has been since it IPO'd, but potential bottom here. And then look at all these green candles that are forming. And maybe if it breaks this range here, we would have a setup in toast. So that's the beaten down setup where we're starting to see potentially some bottoming. And then the opposite of that is stocks that have shown a lot of relative strength. So Monster one here, if we pull this thing out, you don't see much here outside of a break of a major range over the last 2 years, right? And you see the break right here. But what this is a big consolidation at all-time highs after a big run. And let me actually get on the weekly so you can see it even better. Now it's really clear. Big run, a lot of consolidation, and has broke to all-time highs. This is the other type of setup we're looking at. That is stocks that have shown relative strength that are at or near highs. So we have Monster here. There's a big group of stocks that I'm tracking here that are either near or a little below all-time highs that have shown relative strength. A lot of the energy stocks are doing that. You can see SLB, while not all-time highs, at highs that go back all the way to 2018. So very strong here. SLB and Monster. We just put out an alert today for SELH, and you can see this one, like Monster, is in the beverages space, and you can see consolidating at highs. And the nice thing about these things is they offer really good risk rewards as well. If these things are going to make measured moves, so essentially here, if we look at the measured move, SELH has run from 40 to 102, so you can see how much room we would have to the upside for the next breakout. We could see something similar and risking very little to potentially do it. All right, that's the weekly swing today. I probably will do a stocks and coffee this weekend. And you guys know I run the swing service over at Bulls on Wall Street. Check that out. Here's today's swing report. I can't pull up the video here, but there's obviously a video we do every day. This is just the summary, some of the focus of the stocks and some of the stuff we're looking at right now. All right, guys, talk soon.